morning, Fred. Bill Martin. Okay. All right. Welcome to Tradespoon in Yellowtown. My name is Vlad Karpel. I'm CEO and founder of both companies. And today we're going to have a live trading room open to trade stock and options using that technology. For those of you who are new, welcome. If this is your first live event, do me a favor, tap in first. Always with the link on your screen, optionsexperience.com, so you understand the risk associated with trading stock or options. You see, I'm showing you what I do in my own account based on my own risk tolerance level. Okay, open. So very important to review your trading journal, trading plan. I always say that if you don't keep a trading journal, I think that's extremely important. That changed kind of my performance in trading journal. You keep a journal, you watch the live trading room, or you watch the recording of live trading room, or you participated live in a trading room. See how I look at the risk, right? How many positions I have, and how do I determine position size? Keep your journal, write down why you get into the trade, why you get out, 3 months before that, 3 months after it, and see if you see any improvement in performance. I believe you will. If you don't do this, that you will have, it doesn't matter how many years of experience you have or days of experience you have. So what are the concepts of, what are the main point of any trading plan is this the dichotomy of control, process versus outcome. That you, instead of looking for gains, right? So process is very important. What is the size and number of positions, right? Everything else, you can look at the liquidity, you can look at the average volume, you can look at certain sectors, bid and ask spread. So you can write down different rules that you find that either universally accepted or just specific for you, because we're all kind of made up a little bit different, right? We all have different psychology or different, personalities. But everybody agrees that you need to know the trade, and you would grade yourself, right? I propose on a $10,000 account, if you hold a position overnight, day trading, same thing. You need to have at least $25,000. That's the minimum, and then you risk less than 1%. Right? The longer you hold, you're looking for higher returns, right? But you invest less money because you just have to wait longer. So day trading, less than 1%. If you're holding for a couple of weeks, couple of months, less than 2.5%. And I guess if you're holding for years or quarters, maybe you can have 4%. So position size is important. How do you determine that 2.5% or 1%? Before you get into a trade, you look at the charts, right? And you look at, kind of trying to find that anchor point. I've been quoting this prospect theory, right? That we have a different relationship with gains and losses, right? And the only way to, first you have to be aware, right, that $250 loss feels a lot worse than $250 gain, and you will look to avoid it in any shape or form. I.e., meaning you're going to wait and risk more than $250, right? We want to avoid that. So if you're 476, right? So you see pretty neatly, right? If you believe 1% gain, 1% loss, right? That's your trading. We've been in this range for a couple of weeks. Even if you hold a position, that's your main resistance levels. Pretty narrow range, and support more medium term, longer term, right? You have to go back to August. 460, right, is your support number 2. So as long as we're above 460, it's a pattern of higher highs and higher lows. We talked about this. We've been going through this consolidation, right? We had 3 different pushes, right? 1 consolidation, 1 consolidation, 1 consolidation. And so we have 3 of these, consolidation and rallies. So a lot of people think that this pattern is going to continue, right? Rally consolidation, rally consolidation in the first quarter of the year. We'll see. But the first step is to break through 480, right? All-time high. That's the first step. So that's how I would approach this. So, right, because otherwise you're going to be flagged as pattern day trader, potentially, if you're going to open, close, and then open again. using the proceeds. So that's $250. If you're doing long-term trading, you say, you know what, I don't like to make these short-term decisions. I don't have time to day trade. Okay, this is medium-term, long-term support for 60. So simple math, it's still $250. So if it's divided by 5, right? 250 divided by 5 is 50 shares, 15 shares, 16 shares. 15 shares multiplied by 475, that's, I mean, what is it? $7,500 almost. So it's almost the entire amount that you have in your account, right? So pretty aggressive. If you're doing day trading, 5 shares, 50 shares, sorry, 50 shares, you know, well, you're buying on margin. You're actually buying on margin. It's the position size. Look at the stop loss, look at the target gain, write it down. Everybody's chasing the returns now. So, and market is in strong uptrend, right? And you know, very little room, very small, narrow consolidation. So there's no reason to fight the trend. Market move below 460, right? Until it moves below 460, no reason to fight the trend. So that would be approach. For short-term, medium trading, I've been using Active Trader and Yellow Tunnel, right? So let's look. Yellow Tunnel, there are a little bit more signals, so we'll use that. You can hold these positions. If you're holding them, you know, for more than a couple of days, you know, initially it shows you that these are the stocks that, you know, have momentum to outperform the market. But, you know, if you're holding them over a few days, then potentially you're kind of doing this on your own. So let's write them down. So AMAT, GE, Goldman Sachs. Trying to pick liquid names that have liquid options. AMAT. Some of the retail names like Target, and technology, STX, storage, data storage. Wait 15 minutes. Right? You have big institutions, they're opening, closing positions, and you have big movements, especially end of the year, volume is low. So, you know, you don't want to get stuck in a position. So you wait 15 minutes, 5 minutes, and you look at them and decide what that have different personalities. We all have different background. We're managing different amount of money. Maybe 250 is too much for you, or maybe a point where your losses and gains, you look the same way, right? Because if you don't look the same way, that means you just investing too much money and you're chasing returns, and at some point you're going to make a mistake, right? You're going to make a mistake and you're going to have a large drawdowns. So that's that is the kind of the main point of trading, right? Figure out a point where $250 gain looks like $250 loss, and you're fine with it, right? And some people look for 1-to-1 return. Some people look 2-to-1 return. In 2-to-1 return, you're not going to be 50% accurate, right? Just, you know, you wouldn't be here if you were doing 2-to-1 return and be more than 50-50. But that doesn't mean it's wrong, right? It's just you need to make sure that the gains, the aggregate of gains exceeds the aggregates of losses. That's it. So look for open bell. All right, so Goldman Sachs target slightly lower. Semiconductors continue to outperform. See where the market is. It's above 200, so trying to break above 200 and confirm the breakout. QQQ flat. Spiders slightly down, so slightly down to flat. Good morning, Faust. Good morning, Ricardo. Season dollars, right? You don't want to lose more than $2.50, right? One contract, right? If you buy an option for $2.50, you don't want to lose that entire amount. I do still follow the same trading level. So this is a good example, right? So you just have to approximate, right? Or, use, right? So, or drops below, let's say 470, 468, 467. At that point, it doesn't matter if you have spider or spider options, I would exit, right? So depending on what options you're buying, if the stock drops by stock options derivative of stock. So the exit strategy is the same, right? So I would exit if it drops below 468. So then when you determine the number of contracts, if you're buying option down $500, so then you just have to either use option spread, or instead of a $5 option, use $2.50 options, or use $5 options and exit if it loses half of the value. The only problem, if you buy deep in the option $5 and spiders drops 1% quickly, you might not have enough time and you might be down $500. So that's the disadvantage of options. So that's why I would say if you have $10,000 account, you probably don't want to trade spiders options, right? Because you're risking, potentially, 1% of spiders, the move is $5. So if you have 100 shares, that's $500. You might not be able to react to $2.50, right? Or use option spread. But I wouldn't use option spread for day trade. Then just, I guess, one contract, I would just say it's too much, right? That's why I usually stay. Hard to me. Okay, we'll look at Pfizer. Spiders, meanwhile, flat. QQQ slightly higher. You can switch to 5-minute chart and just see what's pushing a little higher. So everyone who was leading yesterday are pulling back, like Bank of America, regional financials. And everything who was lagging yesterday, like Google, continues to rally. All right. And we have GE here. One, two, three, four, five, six. 1, 2, 3, 4, 5, 6. Okay. Position left from Qualcomm from yesterday, so then maybe it doesn't make sense for me to buy AMAT and Micron because they are highly correlated to each other, right? Almost 146.22. They're correlated to each other. Then maybe Micron doesn't make sense, right? Unless I exit from Qualcomm. See, do I have GE here? Profit accelerator, I think I do. Yeah, but it's facing this overhead resistance from 22. So we'll have to wait. All right, so we have one candlestick waiting for more interest rates. 10-year yield dropped. TLT is up 1%, make new lows, right? So both of this is bullish for the market. Lower yield, lower dollar. That's a tailwind for the QQQ. For now, not a big move, but positive catalyst nonetheless. All right, so I have 7 minutes. Let's review the other positions since we have time. In Discord, please type your questions in stream. It's 0.5%. Next one is trying to exit at 146.40. It got close, but I think it pulled back now. So that's Qualcomm from yesterday, and I do have the QQQ put spread, so in January. So Bank of America is one of them, expiring in January. So I'm concentrating on options right now. Stock, I have luxury. If I'm off by timing, I can just wait. Options, you have to be, we're growing higher, right? So then I do have JPEG slightly. So Still bullish on Bank of America, still bullish on Russell 2000. It broke to 200, continues to grind higher. Have half of the Qualcomm position, but I've been kind of going sideways, slightly positive bias, but not a lot of momentum. Not a lot of momentum, and you know, a lot of people are bullish on gold and they're bullish on equities. I don't understand how that can. Historically, that usually doesn't happen. So it makes sense to start thinking at least small hedges. So that's reason, you know, that I don't think we're going to break 420 by February. Silver, trying to exit silver. I only have 3 weeks left. So that's another January position. I still have small AT&T position, TLT position, so bullish telecommunication. And TLT is trying to break through this 100 level, very important level. All right, so 841, we have 2 candlesticks now. General Electric is trying to break through this overhead resistance. A little bit overbought. AMAT is turning out. Micron, same. Goldman Sachs, same kind of thing. I mean, those have similar price patterns. Target resistance, right? 842. What else is happening? So I guess not a lot of momentum. I mean, except Treasury market. Treasury market, you know, large move by consumer discretionary up 0.5%. Spiders flat. So not a lot of movement again. We're at the end of the year. Usually people already thinking about New Year and going on vacation instead of trading. LA Lily is up and NVO is up. Silver slightly down. You know, because if it drops to 126, we might not move even 0.5% today because it's flat. So potentially I might have to wait till, you know, next year, right? Only have what, today is Wednesday. So there's only 2 more sessions. So I don't wanna exit, and I wanna think about adding because I'm bullish on GE. It's been a signal for many weeks already. You know, Bob told me to buy it, you know, months ago. $2, right? If it drops $2, right, a little bit more than one, I don't want to be down more than $250, right, on $10,000 account. And I want to be down only $100, right? So risking $100 if it drops to 126, then I have a choice: either get out and lose $100, or, you know, enter the second trade and then risk another, you know, few dollars, because that would be close to my stop loss. So if it drops $2, that's 50 shares, right? Shares is $100. You know, if you buy 126 call that expires on Friday, right? It drops $2. Well, you're down more than $250 and you're out, right? So you have to buy maybe. You can buy 126 call that expires, let's say, in January, and look at the options delta. Options will only move $1, right? So you kind of, that would be your approximation, right? Because in theory, if I exit at 126, you want to exit at 126. Doesn't matter what the strategy you're using, right? Because I'm looking at the key support, and if it breaks through 126, so that, you know, you don't want to be down. Here, the best way is to look at options delta, and you know that delta moves. You know, the gamma moves differently the further out you are, right? So if it's this Friday delta, it moves a lot faster than the delta, you know, monthly delta January, and you know, a lot faster than the price move of the stock, right? All right, so let's try that. It's been, and I would reduce the size, right? Because it's facing overhead resistance. More likely than not, it will pull back, right, to 126.71 or, you know, 126 aggressive. So I'm going to put down $100, right? You know, I would maybe reduce it to 30 and just see, because you might have to buy it more than once. That's kind of my thought. That's a little bit overbought. Okay, so I bought GE, and now I have a strategy, right? So half of the shares, I want to say around 60 cents, so 128.50, 128.60 today, unless something happens in the market. What's left today is Wednesday, non-schedule. Okay. Well, initial claims, right? If there's some big surprise in initial claims, one way or the other, market will move. If there's no surprise, then it's going to be none. Basically, 2 day, 1.5 day left. I won't count December 20. Wait till maybe next year, which is fine. 15, and then I'm looking for 1% move, which would be $1.30, right? So 129.30, 129.30. So similar approach to Qualcomm, right? Similar approach to Qualcomm. So I bought it at 128, trying to get out at 128.60, and then 129.30. And now I wait. So that would be General Electric. Any questions on General Electric trade? Pfizer is consolidating. Let's look at Pfizer. Yeah, it looks like it's filled. I think GBTC. It's not just Bitcoin, right? So it's been, I think, underperforming, right, before, and now it's outperforming. And now it moved 364%, right? So 86 and 364, where Bitcoin I don't think it dropped 86%. Let's see. It dropped 77%. It dropped 77%. And it rallied 200%. So it dropped a little bit less. It rallied a little bit less. It's the same thing like UNG or GBTC. It has not just Bitcoin, but Ethereum and some other stuff. I don't know what it has, honestly. That would be my observation. Right from the top, Bitcoin is down what? 34%. So the GBTC down. Okay, it's very good, Bob. All right. Meanwhile, let's see what is happening. What is happening? All right. So not much is happening. Google pulled back, Amazon staying higher. Let's see how's the Magnificent Seven. They were underperforming yesterday. They're outperforming today. No. Apple, Google, Microsoft, Netflix slightly lower. QQQ slightly again catch-up trade. Okay. It's one of the weakest, probably the weakest Magnificent Seven. See, today Wells Fargo underperforming Bank of America. Okay. A arc is pretty impressive. Looks like it's trying to clear this level. It's August of 2022 level. There was similar price patterns. Right, they both have similar price pattern. Okie dokie. All right. Any other questions? Struggling with the overhead resistance, whether it's GDX or silver. All right, GE to stay above 128,786. Well, maybe here, 127.71. Right, that's the first level of support, because if it breaks through that, there is a risk of, just give up all the gains. On the upside, it needs to clear the 128 level. We're at 128.23, but we'll see. If you guys have any questions. Pins. Can I look at pins? Sure. So pin into snap maybe, all right? So very strong uptrend after earnings continues to grind higher. Let's zoom out to weekly. So we had a strong earnings continues to grind higher. Looks very similar to ARC Innovation, where it cleared the 22.23 level, continues to grind higher. It's been stalling for the past 3 weeks, kind of not going. Not much different, right? Not much different. It got so bad, right, that it looks good, right? That's usually the expression. Very long base, right? Multi-year base and breakout. So trades like that and ARC. First, I would compare ARC to pins, right? If you, right, that doesn't make sense. So pins have been outperforming ARC Innovation, right? They outperform in the bull market, and actually has been outperforming bear market. Okay, so pins look better. Okay, it's the same thing as if ARC is going to continue go higher, pins is going to go higher, snap is going to go higher. I mean, there's individual stories. If they miss on earnings next time, then they will, diverge from the trend. If you believe in a company, you think they're better than ARC Innovation or they're better than fine. But it's a volatile stock, right? It moves a lot on the downside. It moves a lot on the upside. So very sensitive to interest rates. It's the same story, right? If we're going to have a bull market next year, pins is going to continue going higher, right? And market is going to be forgiving even if any signs of recession. Pins is going to be the first one people are going to sell off, right? Because it's a social media, it's marketing, and these stocks get annihilated the first. So it's your call on the market, right? Are we going to have a recession next year? I don't know. I would wait before getting. I mean, one way to trade is what I said on the. You do have a pretty well-defined stop loss, right? Right. So depending on how aggressive you are, you can say 34.66, but we can be there very quickly, especially these two candlesticks not going anywhere. 30. It's going to take at least an earnings call, at least one earnings call to push it below 30. And if if it's below 30, then this uptrend is over. So you're risking $7. But the signs of recession might not be there in January, they might not be there in February, they might not be there in March, and market's going to continue going up. Go to 80 if there's no recession, soft landing, right? So that would be my approach to most of these trades, right? It doesn't matter if it's pins, it doesn't matter, I'm in the IWM, I'm in the same boat, right? If I'm buying IWM, I cannot be bearish on pins. Because if pins is going to drop 20, 30%, well, IWM was going to drop 10, 15% as well. most likely. So that's kind of my approach to IWM. As long as it's above 200 or 198, it's going to grind higher. If it drops below 198, then this probably rallies behind this. So that's my approach to any high beta stocks. It doesn't matter if it's IWM, small caps, or it's been interest, Snap, shit looks like. At least look at it once. Because if you never look at the balance sheet, then and you have no idea how sensitive they are to earnings or underlying business, mode, I would just drive. I would buy ETF, right, like IWM, because pin interest, it's just an earnings story, and I have no idea how much companies are gonna spend on marketing on pins. If the economy is slowing down, probably not a lot, if I have to guess. All right. AMAT is trying to clear all-time high. All right. Am I missing something? Yes, AMAT is turned positive. GE continues slightly lower. Amazon turning positive. Yeah, I would look at Amazon as well. Same thing with Amazon, right? So if it drops below this breakout, okay, then if it drops below one, we'll just have to wait and see. Half of the shares, and then another 60 cents, 70 cents on half of the shares, 1% on the rest of the shares to GE, right? That would be my strategy. For now, GE is 128.27, so we're getting 128.33 cents. Thank you, Bob. Victor, thank you. Bob, Intel building plan in Israel. Yes, so big investment. Intel has a big investment in Israel. How's Intel doing? Is it better than Qualcomm today? Yeah, looks like breaking to the upside, then this rally is going to have a hard time breaking to the upside. It looks like Apple and Google are starting to reverse a little bit. All right, any questions? Discord, tap in, please, on stream chat. If not, Happy New Year, if I don't, guys, talk to you. So there is a session, so I'm gonna mark the session. And then I think Friday is the full day, so we'll probably do short closing bell as well. So if I don't talk to you, Happy New Year, best wishes to you and your family, happy holidays. Thank you for participating on Discord. Much appreciated. Thank you. All right, go to webinar. Any questions? The war, nobody wants war. I agree. All right. Bob, going back home. Vacation is over. All right. So looks like GE is getting close. Qualcomm kind of not going anywhere. AMAT not going anywhere. Spider 911. Any questions? Fred, thank you. Very kind of you. Thank you. I appreciate the feedback. Thank you. Yeah, I appreciate your guys' insights and questions. And, a lot of you follow. Just a year full of surprise. I'm sure, December 27 of 24, I will list a lot of things that people got completely wrong and, a few things that people got right. Thank you, Faust. Thank you, Fred. Tesla is up this. Yeah. Fred, thank you. Bob, yes. Most analysts are very bullish for the next year. I agree. I'm an exception. What is it? Bear with all the bullish positions. So it doesn't matter what you think. It's what you do matters, right? A lot of people say one thing, but they do different things. Something to keep in mind, right? So I am bearish, but very cautiously optimistic because, I have 401k and I don't have any short positions in my 401k. So, but, I still have a lot of cash because I think it's going to be a volatile year. All right, Victor, Happy New Year. Bob, come out of hibernation. Sounds good. Martin, Happy New Year. Welcome back. Positions. I did exit half of the position. So I took 0.5% on half of the position, and I'm still holding Qualcomm overnight, right? So on half of the position. So it's about, what is it now, up 0.5% or something. Well, it pulled back completely now. So I did close half of the position yesterday. I'm still holding half. So I'm still bullish on Qualcomm and over whether it's NVIDIA, Qualcomm. But it's a small position. I mean, I would watch 143.70, right? I would watch this level, right? If we break below this, then that's not good. But, now I originally entered only half of the position, so now I only have half of the position. So at 143.80, I'm going to be down less than $100, or maybe even close to break even. So at that point, I have electric. Happy New Year, Martin. Thank you for. Cash does. Oh, you see it perfect. Thank you, Martin. So until Fed is going to start lowering interest rate, cash is still in a rally. If there's any macroeconomic data that will point to the contrary, at March or April, and not first half of the year, well, market is going to pull back significantly, right? Because this whole rally is contingent. The premise is that Fed is going to start lowering interest rates in March. And I don't know if they will or will not, right? I follow a lot of macroeconomic data and analysts that don't think they will lower interest rate as early as March. There's no reason, inflation is still not low enough to start cutting rates. So, but, that's the debate we've had for the past, year and a half. So that debate is going to continue. I'm bearish on the market. And basically, I have a position that then, in interest or ARK innovation, right? That is a proxy that there's just too much money in the system, distress somewhere. I don't know where, but somewhere there are going to be liquidity issues. So if gold is going to, it's at all-time high right now. If it's going to break out, analysts, which I actually respect a lot, that are calling both gold to go up and equity market to go up. There's not a lot of data points about the recessions and and how the gold, but based on historical data we analyze, right? The only soft landing we have seen in recent history is 19 years ago when Fed started lowering interest rate. We had 3 years, 95, 96, 97, 98, up until Russia defaulted on its debt, market would just continue going higher, but gold would continue going lower. So I think gold is right. I think gold would, but equity, is going to pull back. So I think gold and silver are going to break out. Timing-wise, it's difficult, right? It could be January, it could be April. That's, it's been trying to do this for many months, right? Almost every year, it's trying to make a run on all-time high, right? It did it in 2011. Then you had some, then it tried it in 20, 21, 22, 23, 24. So who knows when it's going to break out. Soft landing is a myth. Could be. Soft landing could be. Not know this either in April, in January or April. I mean, February, April, right? Because right now, the bull's assumption that the Q4 is going to be better than Q3, and then Q1 is going to be better than Q4. Well, maybe not Q4, that's why, but at least Q1 and Q2, the revenue and the economy will react. Patiently wait and see. All right, that's all I have for today. Thank you very much. Have a great day. I will see you tomorrow morning. Thank you. If I don't, Happy New Year. There are issues in the economy. Nobody's arguing about that. We'll just have to wait and see. All right, guys. Thank you. Have a great day.